It's Sunday, January 3rd, 2021. This is All About Your Benjamins and your weekly mixtape and weekend review video. Welcome to a new year. Welcome to the first All About Your Benjamins weekly mixtape and the weekend review video for the year. Let's get to the headlines that may or may not be impacting your financial plan and portfolio. But first, to those of you listening over on the podcast, welcome. This is the first mixtape and weekend review that's going on the podcast, a new format change up for 2021. So welcome to the podcast listeners. Hello to the YouTube watchers. And that should cover everybody. So let's get to the headlines. Just a few headlines to cover from the last week. Last week was a shortened week. Took the week off prior because of Christmas, but not a whole lot there either. And the first one, we'll go with the bill for the stimulus package. So President Trump signed a new COVID-19 stimulus package, encouraged Congress to go back and increase the $600 amount that beneficiaries would receive to $2,000. And as we all know by now, that was rejected. So $600 checks should be going out to families that are in need, families that have an income of less than $150,000 or individuals under $75,000 should be getting these checks. I've heard that they're already going out. I haven't talked to anybody who's got them yet, but they should be going out and being processed. Unfortunately, I think that this whole example of President Trump suggesting more and then it being rejected just shows why I hate politics so much. While we don't get into politics too much on here, it's such a divisive topic and I don't really want that. But it is frustrating to see that there are families out there that are struggling, small businesses being forced to shut down by the guidelines. And by no means do I think this is an easy job. I don't have the answer, which is why I try not to complain too much. I don't like complaining if I don't have a solution or at least an option for a solution. So I don't think that it's very easy, but I think it's very hard to believe that we can't come up with funds to help families who are really in need, to help businesses that are really in need, especially when they're being forced to shut down. So it's frustrating. I know it's all politics. It's, we've got to win, they've got to lose type of thing rather than rallying together as politicians to help out the people who are in need. And I don't think anybody who has had a prosperous 2020 would be upset at somebody who struggled in 2020 getting some help. So I think that at the whole, the public would want the people who need the help to get it. It's just the politicians can't figure anything out and they'd rather fight. So very frustrating. Not surprising, and I hope that when it comes time for re-elections, we all remember who was helpful, who had the best interest of the country in mind versus who was just going with the party because that's what they're supposed to do. And maybe we'll see some shakeup in the future, maybe not. Anyways, I'll get off that soapbox. I don't like politics, and part of the reason is I don't spend enough time researching it to have a knowledgeable debate with somebody on it. I just look at the way things are and what's best for the public, and that's what I want to see happen. And when I see fighting going on where I don't believe they're trying to figure things out for us, that's what frustrates me. So the bill was signed, checks are going out, not as much as families might need to help them through, and we'll see if we get any bump up in the new year when everybody's back in session. The next article you'll see talks about 5 trends in 2020 that worked out, and if you look at that first chart, you'll be blown away with what the market did, especially from March on. Remember March, it was very scary time. Markets falling 30%. Government saying no RMDs in fear of what's going to happen with portfolios and retirees being forced to take money out when the market's down. And the market just went on a tear coming back, which is another reason that's why we have investment policy statements. That's why we have a plan for your portfolio. The best thing to do is usually stay the course if you can. Understandably, I know why people sold out back in March, but that was the worst thing they could have done. And unfortunately, many of them are still sitting in cash, missing this huge recovery that you're going to see. So you'll see the NASDAQ, the S&P 500, the Dow, all ended the year positive. So if you stayed invested, there's a good chance your portfolio grew. And depending on where you were investing, you may have seen a lot of growth. So a diversified portfolio, in the business we talk about diversification means always having to say you're sorry. As an advisor, we have parts of the portfolio, international, small caps that still didn't do horrible, but didn't do as good as what you're going to see the NASDAQ did. But prudent investing is diversifying it around, which means not all of our money is in the NASDAQ, so we don't have that pretty pink line that you see, and I've got up on the video as well. Be careful of looking at, here's the 5 trends that did real well in 2020. This is what leads to a lot of chasing performance. So you see that momentum stocks like Tesla and Peloton did real well. So people want to dive into those. And maybe those do well in 2021, but maybe they don't. Maybe that play is already done and you're late to the game. So you don't want to chase trends. Same thing with looking at the cryptocurrency world and Bitcoin. If you believe in that technology, if you believe in that asset class, then maybe you want to continue to invest in it or invest in it for the long term. But if you are wanting to catch it because now it's at $31,000 a Bitcoin, maybe that's a little late. So don't look at these trends. I don't share this with you saying, hey, go dive into these and chase them around. But here's what worked. Here's why it's important to be invested in line with your risk and in your plan and stay invested, because no one would have told you in January 2020 these would have been the 5 trends that would have done well. Nobody in 2020 March would have said the market's going to end up where it did, because we just don't know. And since we just don't know, that means it's best to probably just stay with your plan. Know you're probably not going to be all NASDAQ like this year, but you're also not going to be all in the bottom, whatever it may be, because you're diversified. So take a look at what worked. It's kind of fun to look at those things, but also remember, past performance isn't a predictor of the future, and these may not be the best performing areas next year, or maybe they are, but if you're diversified, you should have a little bit of all that in your portfolio. We'll end with second to the last is a little bit about COVID. I'm sure we're all sick of hearing about it. I'm sick of bringing it up every week, but it's a part of what's going on and impacting your plan in the portfolio. So end of the year, we ended with one of the worst months. December was a record-setting month in the U.S. for COVID. Lots of reasons that could be, more testing, whatever it might be. But I will say that on a personal level, when all of this started, my circle of people that I knew, nobody was experiencing COVID. Nobody was getting sick. Nobody knew anybody that was getting sick. But as has gone on, that circle gets closer and closer and closer. And now I have people within my 10-person circle that I know that have either had it or have had family members that have had it. Luckily, we've all stayed safe in our household, but it is getting closer and closer and closer, and more people that I know are getting it or experiencing it. So for whatever that litmus test is worth, that's what my experience has been as of late. And then the final piece, we're global investors. I believe in a globally diversified portfolio. You hear that from me all the time. A little update on Brexit. So we've talked about Brexit here and there over the years, but we know that Brexit was a big deal back in the day. I can't even remember what year it was, and I didn't go back and look at it. So years ago, Brexit was a big deal. Market sold off, things recovered. Well, this past week, it's officially done as the UK signed their trade deal with the European Union. So they signed the post-Brexit trade deal to wrap everything up. So that's done. What does it mean? We'll have to wait and see. We'll see if it plays out to be a good thing for the UK or if it was a bad decision. But nonetheless, that big scary event back in the day has taken a number of years to transpire and is officially wrapped up. And for the most part right now, nothing major has happened, at least when it comes to the markets. So we'll see what this means for the UK. We'll see what it means for business going forward and trade. But again, going back to those moments of things that happen, big headlines, scary reactions in the market, if you react to those, usually that's not the best thing for you, and it ends up negatively impacting your plan rather than if you just stick with it and ride out. The final piece of that is between the trade at the beginning of the year with the March going down and recovering, talking about Brexit and revisiting that event. That's why you need to have a plan for your investments. That's why money you might need in the short term, and I would say maybe 3 years or less, depending on your risk tolerance, should even be in the market. The more time you have, the greater the chances are that you will see a positive experience in the market and you're able to ride those events out. But if you know you need this money the next year and we have this second strain of COVID running through and it becomes worse again, you don't want those funds invested because we don't know what the market's going to do in just a year or less time. So again, remember these events, remember how you felt in the moment, and then watch what happened from that event to the future. There's great charts out there that show all these things, but usually those events end up being minor blips on the radar when you scale back over time, but it doesn't feel like it in the moment. And that's okay. That's emotions. That's why money is so hard. That's why I have a job, is to help people not only with the plan, but manage the behavioral component when it comes to finances. All right, so that's it. A little bit longer, but I want to make sure that these mixtapes and weekend review videos are a little bit more meaty now that they're going to go on the podcast as well. Give a little bit more of my thoughts rather than just trying to cut through the news real quick. Not that I know everything, not that my opinion's always right, but if you're consuming this, there's a chance that you might want to hear what I think, and I want to share a little bit more of that. Plus, it helps me continue to learn and dive into these things more, because I don't want to put something out that I don't really believe in. I don't want to have an opinion about something if I haven't spent time looking into it, or if I haven't spent time looking into it, I want to be able to tell you, hey, I didn't go back to see when Brexit started, but I remember when it happened. So anyways, hope you have a great first week of the year. 2021 is here. Didn't magically wipe away everything from the past, but that's okay. You are in control of how this year goes. Check your mindset, check your goals, be optimistic, find the silver lining in everything, and there's a good chance that the year will end up being a positive one for you. If you are struggling, I know it's not always easy to do those things. Sometimes I take it for granted that when you're down, it's sometimes hard to get back up. But surround yourself with people that are going to lift you up. Surround your social media feeds with people who are uplifting, not always being negative. That stuff gets into your subconscious and breaks you down as well. Be optimistic, find positivity, stay away from negativity, and the year will end up being a good one. No matter what it throws at you, you will make it through and be better off at the end of the year than you were when you started if you can maintain that mindset. I know it sounds crazy, but trust me, it's worked for me, it will work for you, and this is what I really want people to kind of dive into, and what some of the writing is going to be in the upcoming year. All right, I've said all right many times. Have a great week. We'll see you in the next episode. Thanks for watching, subscribe, all that fun stuff, and we'll see you in the next one.